What's up guys, this is White Wolf Investing. Today we are going to talk about REITs. First we are going to see what is a REIT, then we are going to see pros and cons of investing in REITs, and finally we are going to see 3 REITs that I personally like. Let's get started. So REIT, it stands for Real Estate Investment Trust. These are companies that make money off the real estate market. Now, they don't always own the real estate, as we are going to see in a bit, but let's keep it simple for now. The real estate that they own, the real estate assets, are not just the common ones such as apartments or residences in general or office buildings. They can also own warehouses, hotels, hospitals, what else? Infrastructure such as cell towers or energy pipelines, for example. REITs, they are traded in the stock market just as any other stock, which means you can just go on your phone, log into your broker's app and buy some shares. However, if companies want to be classified as REITs, they have to meet some criteria that will pop on your screen somewhere around now. However, the main criteria that we are going to focus on is that 75% of their assets have to be in either cash, real estate or US treasuries. 75% of their gross income has to come from a real estate related type of deal, and 90%, the most important part is that for us investors at least, is that 90% of their taxable income has to be given back to the shareholders in form of dividends. As I said previously, REITs, they usually own real estate, but not always. There are 3 main types of REITs. First, there are equity REITs, which are the ones that own the real estate and they make money by renting it. Then there are mortgage REITs, which are the ones, as the name says, they make money off the mortgages, they own the loans, and they make money off the interest on the loan. And then there's also the hybrid REITs, which are the ones that do a little bit of both, they make money both ways. Starting with the pros and cons, let's start with the pros, and the first pro is that REITs are a great way to invest in the real estate market. Say you don't have the capital, or you can take out a loan to buy a rental property, but you believe that the housing market is going to keep growing, the prices are going to keep going up. REITs just allow you to invest into real estate even if you don't have the possibility to buy a property yourself. Another pro of investing into REITs is that they are way more liquid than buying a house. What is easier, to go onto your laptop or on your phone and press a button that says buy, or go check out one house? If you don't like it, you have to check out another house. If you like that one, you have to make an offer. Then if your offer is accepted, you have to take care of the paperwork. So an entire ordeal, right? It's way easier to just go on your laptop or on your phone and press a button. Also, if you want to sell, you go back onto your laptop, you sell the shares of your REIT in the same day. If you want to sell a house, you have to wait maybe days if you're lucky, normally weeks, maybe months, so that someone makes an offer and you accept it. A third positive of investing into REITs is that, as I said in the criteria part, they are obliged to pay 90% of their taxable income back to their shareholders in form of dividends. So it's a great way to make some passive income, to have some sort of passive income. There are even some REITs that pay dividends monthly. Now moving on to the cons, the first con that I have to talk about is that REITs, they usually grow very slowly when compared to other stocks. They are also not very volatile when compared to the rest of the stock market. Another con is taxes. The dividends that the REITs they pay out, they are taxed as ordinary income, not qualified dividends. So if you are American, I suggest you put your REIT stocks into your 401k, for example. If you are not American, I suggest you find something in your country that is the equivalent to a 401k. What was the third issue? Oh, the 90% of the money of the taxable income that the REITs have to pay back to the shareholders. This leaves them with only 10% of their taxable income to reinvest. So that's the same time there's a pro and a con right there. Now I do believe that the pros, they outweigh the cons, but let's move on to the 3 REITs that I personally like. Now starting with the best REITs, let's get started with ADC, Agree Realty Corporation. It is a REIT that invests in commercial real estate, so you could argue that now it's probably not the best time for it due to COVID-19 and everything being closed down, you know how it is. But They did have 1,129 properties as of the end of 2020. As you can see, Walmart is their biggest client, but they do have properties spread around multiple industries such as home improvement, grocery stores, tire and auto services, pharmacies, farm and rural supply. So you can see that they are in multiple industries at once. Now this REIT has been investing heavily recently. As you can see, they reached a total of $1.318 billion invested in 2020, and they intend to invest another $800 to $1 billion in 2021. So this at least tells me that it is a REIT that intends to keep growing heavily in the near future. But however, what caught my attention to this REIT, what caught my eye, is that they collected 99% of the rents they are owed for the past 6 months. And if you look at realty income, ticker O, which is kind of the benchmark for REITs, their average of rent collected is only at 93.5. See, this just shows me the reliability of this REIT ADC. Oh, by the way, before I forget, shout out to my boy the Stock Investor. He also called out ADC on TikTok, so be sure to check him out and maybe drop him a follow. Next up we have American Tower, ticker AMT. They invest in cell towers, so as I said at the beginning, not all REITs invest in the normal common real estate, such as residential real estate or commercial real estate, for example. This is one of those cases. I mean, it's kind of still commercial real estate, but you get my point. It's one of those cases. They invest in cell towers, so they own the infrastructure, they own the cell tower, and then they rent it out to telecommunication companies such as AT&T, Verizon, T-Mobile, for example. In the US alone, they own more than 40,000 towers, yes, but what I like about them is that they are a global company. They are in countries like France, India, Brazil, Ghana, for example, and I like this because it gives me an exposure to multiple markets. For example, in countries such as the USA, France, or Brazil, this will give me exposure to the 5G revolution. And in countries such as Ghana, for example, or other African countries, this gives me an exposure to developing countries, developing markets. Also, we can see in this graph that people are using more and more mobile data. Usage has been growing at a CAGR of 62%, around 62% since 2007, and you could argue that this is an exponential curve, right? The faster it grows, the faster it will grow. And if you ask why is this, I would probably say it's the infrastructure that is more developed than it once was, but also it's just an habit. Nowadays, we just pop out our phones and we go on the web, we go on Instagram, use mobile data. So this is just going to keep growing. This is a market that it has nowhere to go but up. Bonus tip, check out Crown Castle, ticker CCEI. It is also a cell tower REIT. I do prefer AMT due to the fact that it is an international company, but CCI could also be a good pick, so be sure to check it out. Now let's just quickly go over the last pick for today, company or REIT, Equinix, I hope that's how you pronounce it, ticker EQIX. It owns over 220 data centers, over 60 markets, and the main critic against this REIT is that its dividend is only 1.62%. However, it's still a dividend of $11.48 since the share price is now over $700. But as I said previously, REITs they usually grow very slowly. However, this one is still in full growing mode. Taking a look at the predictions for April 2022, TPRanks predicts almost $840 per share, Yahoo Finance predicts $836.85 per share, and Coifin has a more conservative prediction with $824.54 per share. So as you can see, it is a REIT that is expected to grow heavily this year, and once they are fully grown, so to say, you could also expect the dividend yield to increase. I like this REIT because I believe that the number of data centers in the world is just going to keep growing as we are moving to a digitalization of the world, if that makes sense. Also, with the COVID lockdown, internet traffic obviously grew heavily in 2020. So I just think that this REIT is in an excellent position for the future. So this is the end for the video today. Let's just have a quick recap of what we discussed. REIT stands for Real Estate Investment Trust. These are companies that make money with something related to the real estate market, be it by owning and renting real estate or by mortgages on it, whatever. We as investors like it because of the dividend pays out to its shareholders. three REITs that I like are ADC, AMT, and EQIX. I also mentioned CCI, so be sure to check it out as well. So this is all I had for today for this video. And before you go, I would just like to ask you something. I would love for you to give me some feedback in the comments below. So I'm still starting this YouTube thing, as you can see. So I would just like to know, what do you think that I could improve? Be it sound or image quality, or how I present the information. If you could give me just some type of feedback, it would be much appreciated. With this said, I thank you for watching this video. I hope you have a nice day, and I expect to see you in the next one.